Hello, this is Rich Pazin, CMT. It's December 6, 2018. We're seeing a lot of turbulence in the U.S. stock market, and I've been looking for a major long-term top anywhere from 2018 to 2020. And we should see a bear market of 20 or 30% drop in the U.S. stock market, maybe more, maybe just a little less. And there should be a recession coinciding with that. A recession should end no later in 2021. And my thoughts are real estate's either going to peak out ahead of the stock market or we're being kind of aligned with the stock market and economy. So anyways, we're seeing some signs here to really try to stay on top of what's going on in the world. And I must say there are pockets in the world and in the U.S. that show some good economic strength here. But at the same time, we're seeing deterioration. It looks like the world is decelerating, and there are a few countries that are now in contraction area on their way to recession, it looks like. So got some kind of process going on here that could negatively impact real estate eventually. Now let's look here. This is the NAREIT Real Estate Investment Trust Index. Got a 9-year business cycle bottom that was near a recession in the early 1980s, 16% drop in the index. Then we see a recovery, and then we see a decline of 52% into a more important 18-year cycle along with the 9 and 4 and early 90s recession. We see recovery and then another drop of 36% into just a 9-year cycle. And then we see another move and a big collapse for the Great Recession for 9, 18, 36, and 72 years. So it was actually super cycles of 36, 72 years, creating that 71% drop. So we can see this characteristic, the more important the cycle, the bigger the drop. Well, right at the moment, what we've seen is a bull market along with the stock market and the U.S. economy growth, and we've seen some hesitation here. It's in the time frame to pull down out of a top into a 9-year cycle bottom, and only a 9-year cycle. So we probably should assume up towards 15, 16% to maybe as much as 36%. And I just said in the stock market, I'm still looking for 20 or 30%, but it could be 15 to 50%. We just don't know. It depends how the fundamentals align, and fundamentals can be very variable. Okay, so at any rate, what we have here is it's time for this pullback. Now, the interesting thing is 2018 was the first year for a bottom, but that's hardly any decline. That's just a hesitation. And I'm just not coming up with enough evidence to say, oh, it's already bottom, we don't have anything to worry about. I suspect we're going to see additional pullbacks here over the next 1 to 3 years. Again, no later in 2021 for a bottom. I think this is just a final leg higher, a little bit of enthusiasm. We have seen some good demand on the investor side, so perhaps they're pulling out of the stock market and putting some in real estate, but I think that demand's going to dry up. So I still want to be looking for a top and a negative reversal here. Frankly, I think if it doesn't top this year, it's going to top in 2019, and I'll even go as far as saying early 2019. So still looking for that top, still looking for a pullback here in real estate. I realize it's location, and I'm looking at primarily just national metrics here. So I understand some could have some protection there, but we've already heard of some areas in the country that have really already taken quite a beating, and I think that can spread. So I'm still a long-term bear here on the real estate side, looking for that pullback here, and I think we're getting closer to it. But at the same time, I don't see a massive decline. I don't see anything like what we saw in the late 2000s here. We're just not due for that. And eventually, once we get this 9-year cycle bottom in, it should swing higher to record highs because there's a super cycle low here, and we've already seen the high, and the next super cycle probably isn't until the 2030s. So there's still chances to make money out of real estate. I'm just saying it's time to have that largest down move per decade. Thank you.